What's going on? What's going on? What is going on? We're about ready. Just a second here. Blam, 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 blam. Ba-dum. Some easy day today. Ride the pumps up. See if we can get right into it. Turn that shit off. We're going to get right into it because we're a little bit late this morning. Had to talk to my attorney this morning. He does me a solid every once in a while, and so whenever he does me a solid, I'm telling him to buy. I'm like, buy calls. So I've broken this little bull flag right now. Not too concerned about this bull flag break in here. We'll see if we have need to find concern at any point this morning. Thanks for joining. I haven't looked at comments just yet. I'll get to comments here in just a minute. So we need to get set up for the morning. That was a nice little pump off the top here. You could see, if you just check my cursor right here, you could see back here on Bookmap we had resistance above. Nice fat support down here. Was just broken here. It's actually a good place to be buying a dip here shortly. So we'll talk about where support lies this morning, where to expect to be able to buy dips, and some other things you have to be looking at this morning. Some important things today would be this OPEX. And an important part of this OPEX is you're going to see today rolling of hedging, or you should see rolling of hedging in the market today. So I told you this morning on Twitter that right off the bell, you should see a rip off the bell, and that's due to the number of SPX options that were expiring at 9:30 this morning. If you watch my cursor here, you saw that nice fat rip above right off the bell. We tagged 370 or just below 370. That was what we talked about.
Seen some comments from the U.S. Deputy Treasury Secretary after testifying earlier this week on Capitol Hill. Is now meeting with other Treasury officials, saying that he recently highlighted elevated cyber threats in the wake of the Russian invasion of the Ukraine in a meeting with U.S. bankers.
Now we talked about yesterday buying 372 calls and riding them to 370. We got that tag this morning. Now the thing I want you to pay attention to this morning is that as these puts expire, you're going to get pumps in the market. So you're going to be looking for places to buy a dip every time these puts roll off. Every time those large hedgings will lose value at some point. Dealers will begin to stop hedging that risk, right, on the put side of things. There should be two other actions today. The first one is going to be the pumps that come into the market from the expiry on these puts, right? This hedging. It'll ramp up too as we get into the 11 a.m., 1 p.m. hour. You guys know in the mornings typically you don't see as much theta burn on option expiry days, but it starts to ramp as we get closer to that 4 o'clock hour. Now so you got that going on, right? You've got the closing of puts today. You've got the burn of major puts in the market today. The second thing that you're going to have today is you're going to have two more actions going on. You're going to have because we're in quadruple witching, right? We've got different products expiring all over the place today, and leading actually into the end of the month to some extent, and then the placing of new bets by banks out there. So you're going to get two actions. You're going to get bets put on the market for the next quarter between now and the 30th, and you're going to get the closing of plays between now and the 30th, and also you're going to get re-hedging, which this is the important part. So as we head into the rest of today, into the close, there will be moments where we find weakness in the market, unlike normal markets where we typically go up, right? So today you would expect if we're going to close, if I'm a bank and I'm going to close a hedge that I've had on for 3 months, then I'm going to wait for a good place in the market to place my next hedge. So you'll see weakness at different points. This morning I was trying to make a point to this morning, what was on Twitter, was that you're going to keep a real close eye on the options market today. For when we get those weak moments, they should be more glaring than usual. And you can see it right here, this sell-off on my left-hand side of my screen. Normally you'd see if I can do this with a let me see if this shows up over here or not. It doesn't look like it. No, it doesn't work like that. Okay, I'll bring this over real quick. Well, give me just a second here. I'll bring this over. So in a normal market, you would see, you would have seen this, right? This nice little pump. We knew 370 was above. This is your first target, right?
President Xi of China saying China-Russia cooperation showing good momentum across the board. Statement there from President Xi of China.
You see this rip here that would normally take place, right? Second rip, you'd get your second price target, 372 probably. Well, we'd ride it back down, buy another rip for higher, right? So on Twitter, I told you, you might expect today a little bit different. You might see a little bit more capitulation. So you get that rip, break below. If we get that break below here, it's bearish, right? Under normal circumstances, I would say, fuck, we're selling the market today. This is going to fail, right? On a quad witching, I'm going to say, I doubt it. I really do. So what I'm going to be looking for is confirmed support levels below 365 is one, right? The next one down is going to be 360, believe it or not. This is going to be bottoms, not bottoms, but support levels in the market. So I'm looking for 365 to hold. I'm looking for 360. That lends me to 3 places to buy dips on rips. So you have a first one down here, right? You got a rip. 1, 2, 3. If I buy here at A, and then I buy below at 365, and then I buy another one down here at 360, I can dollar cost average into calls for the next rip higher on the day, if that makes sense to any of you. It may or may not. But on this OPEX, it is important because you're going to get, the key here is that you're going to get more pronounced moves due to rehedging in the market. So you're going to find some banks, there's some kind of a savvy bear out there might be like, nope, I'm going to wait until we get to 400 or 410 until I put my hedging on the market. But banks don't do stuff like that. They'll just come right in. We hit 369, 370, and they're going to throw a hedge on for the next quarter. And so you'll see this get amplified. They'll throw an outside the money, an OTM puts on the market, dated 1, 2, 3 months out. And we'll get a little bit more pronounced action here as the day goes on in a quad witching. So be aware of that as we continue to trade the rest of today away. So we're going to look at, but this is not the day to be panicking. I know that this morning on social media and all night long, people were saying, well, the market's going to burn. It doesn't really matter if it does burn. If it burns to 350, if it burns to 360, I'm not really too concerned. If it burns to 320, I'm not really too concerned. If this is the day where the market actually crashes out there, you have to look at this from the perspective of, let's look at this as a perspective, right? Let's look at let me see if I can bring this up somewhere else. A different platform here. Just a second here. You know, I always like bears. Bears are always, well, I shouldn't say I always like bears. There's a big reason why I'm not a bear and I will never be a bear. So we're looking at the ES chart going all the way back down here to March 20th, right? Or March of 2020. And you know what I heard for this entire fucking run? Was don't fucking buy. It's going to fail. I heard that here. I heard it here. I heard it here. I heard it here. That's all I heard, right? And now we're down here, right? And I'm being told, don't fucking buy this. Now, even if it crashes today, let's say it crashes to 320 today, let's get real fucking bearish, and it crashes down here. If my long view in this market goes back to the beginning of the fucking stock market goes up. So my point to you is this, is that there's probably some good places in here to buy bottoms. There's probably one somewhere where we are right now. There's probably another one somewhere down here at 2,400. That's your second place to add into this market. And your third place to add in this market is probably fucking lower. You want to get like super bearish. You want to say the world's ending. We're in a long-term debt cycle end, Cap, not in a short-term debt cycle. Well, where the fuck is bottom there? 160, 140? So you're telling me if I've got $10 million and I put fucking 15 or 30% here, right? And if I fucking put another fucking 30% down here at this next level, and then I put the fucking the balance of my money down here, 40% down at 160, I'm still gonna be fucking dope. I'm gonna be dope. And you're telling me that you're a bear out there and you ain't gonna buy these three places all the way down? What are you gonna do? You're waiting for 160 or some nonsense like that? You'll be left in the dust. If you know our market, even if they break something at some point, you will be left in the dust. We've seen it in 2008, 2018, 2020. It doesn't fucking matter. It goes all the way back. 1994, 97, fucking 19 fucking 30, 1987, 80, or I think it was 88 when it actually happened, but or maybe it was 86, can't remember. 86, 87. It doesn't fucking matter. 1970 fucking 4. It doesn't fucking matter. You have to buy dips at some place. The banks already fucking know this, and this is one of those places right where we are. If you're a bull, you don't give a shit if it's 350, 360, or 370. That zone should be bought by a bull. If you're worth billions of dollars, you know it has to be bought down here somewhere, like 350ish. You know that you have to buy somewhere around 280 to 320. You know that you have to buy somewhere between 160 and 180. You don't have a fucking choice. I'm sorry. So this whole argument that's out there right now, oh, what if it fucking dumps? They're like, but Cap, what if it dumps down to 320 down here? It's going to bounce. If it rolls over into next month, it's going to bounce at 320 or down below there. You're going to get a reaction down here. So like this panic down here is not the place to be panicking. If you're looking back towards this run up here, right? And you're like, oh, hey, Cap, when did you start selling? You know when I started selling back over here. You know when I switched over to the SPY from individual tickers. It was the beginning of January of 2021 and switched to the SPY. I told you to be the last one to roll over. It is the last one to roll over. You see the high ticket or the big alpha dogs out there like Apple's being the last ones to roll over. It shows that we're near a fucking bottom. Any kind of a fucking bottom. So if a bear's out there telling you this isn't the fucking place, they're fucking wrong. They're fucking wrong, okay? Now, I'm not saying that the end of June's not a terrible end. I mean, usually June's very weak to the end of the month, but you know that coming into July 1st and the 4th, we typically, even on our shittiest years, have a fat run heading into the 4th of July. Okay, so I want you guys to have some perspective out there as to where you should be buying. You're telling me we came all the way the fuck down here, and this is the worst time to be buying? Suck my balls. Suck my balls. This is a great time to be buying down here if you're a bull. And there's possibly two other places to be buying even lower. These are for bulls that are out there to go long term. If you're a bull and you're like, hey, I'm trying to buy bottoms and not tops, this is the place down here for you to be doing it. You can show them to you over and over and over again. And the reason why you start to buy these and you spread them out is in case we do have more weakness in the market. I think we're going to be weaker in the market for the next year and a half, 2 years. I think the market's going to continue to go down. But what happens if between now and then the Ukraine war ends? What happens if it is a short-term debt cycle and I didn't buy any of these bottoms all the way to the fucking bottom? I'm fucked. I'm gonna miss that run. Let's say we trade all the way down to 180 points, like the worst doom bears say, or 160. What do I care? I'm in a dollar cost average that's just above where that rock bottom is, that rock bottom price. I'm fine at that point. I've deployed my money. I've had the opportunity to not miss any kind of a run in that capitulation move. No one wants to say capitulation anymore. I've had the opportunity. I at least had the opportunity. If you don't even take those moments to buy these bottoms as we move down, you're not even allowing yourself the option for the market to recover, even if it's only for a short amount of time. So I don't want to hear it. I mean, I honestly don't. I've been in this market too fucking long to be listening to the you shouldn't buy here mentality, especially on a larger time frame. This is a place for you to be buying and holding. And if your shit keeps burning, you should be happy because you can buy even more at the next
President
big dip.
Xi saying there's no change in the long-term and good momentum of the Chinese economy.
So that's my point as a bull. If you're a bull out there, this is one of the places. This is one of the. If you look at a longer time frame here, let me get rid of this real
Xi
quick.
comments coming as part of a video address at the St. Petersburg Forum.
Let's look at 5 years. Let's look at doom porn real quick. Right down here, some real fucking doom porn. See that down there, 160? If you're gonna buy in 3 places, it's probably somewhere in here, right? You got this 35. We're at 36.67. It's gonna be one fucking buy for you right there. Your next ones you see down here. You see this break point right here, this level of support that we have here. And you see this other one down below here, right? What we have to break to get below these levels. So that's how you break down below here, right? Here's another fucking place for you to buy. And this is the big one down here. This is the one that you save your big bank for. 40%, 50%, 60% of your bank. And by the way, as we
a little more than an hour into the trading session, and U.S. stocks marking new lows, 36.42 in the S&P minis. The Dow down 200 points, and Nasdaq Composite in negative territory. The energy complex remains a headwind. The XLE is down nearly 4% on the day.
As we move on in time, you should be banking cash wherever you can.
The VIX at 33.15, up less than 1%. Crude futures at 110.44, down more than 4%.
As we go on in time, I want you to be thinking about keeping in cash on the side for that last dip buy down here if the market is at the end of a long-term debt cycle, so that you can load the fuck up the bottom down here in 2024, 2025. I think I got it for January. I think I've got the end of this happening in January of 2024. I think I even give a specific date. I think the end of the downturn is January 15th of 2023. No, yeah, 2024, January 15th. But along this way, at any point, any number of events could send us higher. So if, let's say you're down here, you bought this and you're bitching, you're crying, you're like, oh, Cap, I just bought Tesla at $600 and it keeps dropping, right? If at any point we start to head higher and you hadn't bought this, you'll be kicking yourself. If we stop going down into just a short-term debt cycle and we stop at 2,800 and you hadn't bought here and here, you'd be kicking yourself. Does that make sense? Now, if you were a bear in here and said, I ain't buying none of this down here, I'm waiting until we get down to 1,600 Cap, right? You're insane, because at any point we could have blasted off higher. Does that make sense? And this happens to bears all the time. Over decades, they stay poor in the long run. If you're a bull, you have to be buying down here. You have to buy these marks. You have to have a plan, a trading plan in this market, and say, I know exactly what bottoms I got to be buying. You know what I'm saying? You guys hear bulls out there, right? They're up here going, fuck it, we're going to the top. They're up here buying. Bulls never buy down here. They always wait until we've had this massive run. I remember 2020, down here at this bottom that we had in 2020, they had fucking bears, right, that gave back every fucking dollar in here. They gave it all back. I remember, gave every single, 6 figures, multiples 6 figures, just kept giving it back, kept saying this ain't going to run. I remember in July when we gave a bunch of it back and bears said, fuck it, it's rolling over here. Constant, never ending. So have a trading plan, have an investing plan, and know that this zone here, no matter what shit you hear on an intraday basis, is a buy zone as a bull. Know that banks know this. Banks know they have to buy this. They know they have to buy in here, and they know they have to buy down here if it gets super fucking ugly. This is the place where all the hedge funds, all the banks, all the news stories are telling you do not buy, and these are the actual places you should be buying, period. End of discussion, end of story. There's no argument that you have out there as a bear that says this is inaccurate, this shouldn't be done, This is how it's done. This is exactly how it's done. You're looking for these 3 places to add to your portfolio. This is the only way that it's done properly. There's no better way to do this. Any fucking bear out there that's telling you, right, that they're waiting for 160 down here is a fucking crack smoker. They're poor. They'll always be poor. Does that mean that you don't put some putback spreads, some ratio spreads for these crashes as we head down? No, you do that. You put those on. That protects you buying these dips this entire way down. If you don't know what a putback spread is or a ratio spread, they're fucking free money. Free money. So as a long-term investor, as a long-term trader, you buy these dips down here. 1, 2, and 3. You put on putback spreads to protect your longs that you're putting into this market, and then you day trade this away as we go through this market. So you got a 3-pronged plan, right? I'm going to set places to buy huge dips, right? Set my dips. Where do I want to buy dips, right? Number 2, you put ratio spreads on. These are real simple. Every quarter. Now we had 1 quarter. We had January to March, right? Our next quarter, we had March to June. We're coming into it, right? My God, look at my handwriting. Terrible, terrible handwriting, right? And then this is every quarter, right? Ratio spreads. And then your last point is that you're going to you're setting your dips to buy, right? Set your dips to buy, right? You got your ratio spreads in here to protect your dips that you're buying all the way down. And then your last point is you're just going to trade each quarter. You can trade it up, you can trade it down, whatever you like. You want to buy some, let's say you put a ratio spread on, and you're like, hey, Cap, I'm still bearish down here. We're going to 280, bro. We're going to 260. We're going to 240. Whatever you got, magic number you've got in here, and you're like, hey, Cap, I'm super bearish. Well, sweet. We're at the end of a quarter. You can throw on some outside the money fucking puts down here. And you can pick the next place to your heart's content. You can buy 2800s. You can buy 2400s. You expire them in 3 months. More than likely, you're going to get a green-ass quarter coming up anyways. As soon as we burn this quarter down, more than likely, we're going to get a pump into July, August, September. You'll get a pump. And then actually, July and August, we should get a pump, and then it should start to roll into the election season. But that's your trading plan, not my trading plan, right? You figure out when we're going to be weak and when we're going to be strong. But you guys have to do this stuff as we head into these key moments. These are key pivotal moments in the market. We had one right here. We had another one right here. And now you've got the next next quarter coming up. And that's a shitty way to draw this. Probably a pump though, this Q3, and then Q4 should head down here to this 2800. I actually be buying like 2800s expiring sometime in September or December, something like that. Super fucking bearish. Put back spreads, date them for like October, November, somewhere around there, like 2800 or lower. That's going to be a beautiful fucking trade I got to place this week. So outside of all that, that's what I want you to be looking at today. That's the important thing to be thinking about from the 17th until the 30th. Okay, is your long-term view in the market, your long-term how nasty can it get, and where you should be buying these place marks as we head down from now into 2024. I want you, some of you guys mock me on Twitter and shit. I want you to fucking mark my fucking words. Q3 will be green. Q3 will be green. I promise you. Nah, I don't know what it'll be, but I'm telling you, it's more than likely going to be fucking green. So take that into consideration when you're buying your protection on the market, when you're dating it as we head forward. Now, my next thing is this, is just how bearish are, you're a bull, Cap. That's my other one. Heard this one. Someone said, yucca, yucca. They're like, oh, he's super bullish. My long-term point is, or my long-term target is down here, like 1600. You might say like, hey, Cap, why would you be buying dips if your long-term target down here is 1600? That's because you really can't time this market. There's no way. There's no like guru out there, no banker. There's no Jamie. Like if you go back and watch like Jamie Dimon, or you go back and watch any of these, I can't think of these guys off the top of my head, but any of your big time, long time traders, investors, you can go back and find videos. You can go back and find news stories, and many times in the past they've said things like, we're going to burn all this down here. And if you look at the actual market, we actually turned around at some point before we ever got there. So even the smartest investors out there, smartest traders, they know that at any moment we could turn before we ever hit this actual price target that you're setting for yourself. Mostly, you're saying to yourself, "Hey, I've got a projection of this is where we're going, so I want to find places that I can confidently buy a dip in here, that I can confidently get ready for this next move higher over the next somewhat years." Okay, so just be clear on that. Okay, as a bear, that you can have multiple trades, you can have shorter and longer time frames with bullishness and bearishness, and know that there are places that you need to be buying down here as we head higher. Or I remember, I'm not going to name his name, but there's a trader that I know, a very competent trader, that says, "Hey, I just function best as a bear." Now, if you don't want to be buying dips down here all the way as we head forward because you're like, "Hey, I have to do better as a bear, even in a bull market," then that makes sense as well. That makes sense that you wouldn't want to buy these dips. But I'm not a fucking bear. I'm a fucking bull. And who do I cater to? I cater to both. But there are bulls out there that want to know, where do I buy these dips? Where do I put my chips, Cap? When are good times to buy a dip? Then I've got other bulls out there that say things like, "Well, hey, Cap, does that mean if I buy the dip here, we're going to turn around?" That's my favorite question. Are we going to turn now, Cap, and we're going to go to all-time highs? It has nothing to do with all-time highs. It has to do with managing your portfolio so that you're able to be there already ready to go for when that turn does come. Because the guys out there that are like, "Well, hey, Cap, if I buy this dip here, right, and it doesn't turn, what do I do?" Right? You stay in that fucking investment and you wait for the next one, right? These guys that want you to
Putin
say
saying that after
now.
time passes, European partners will return to the Russian market.
Or is it turning now? Or is it turning now, right? Those guys always, every time, get left in the dust. Those same people will say to you something like, "Hey, is it turning now?" And I go, "Yeah, it's turning now." And they go, "Nah, I'm not going to buy. He's probably wrong." And then it turns, right? And then by the time they get back into that trade, they had missed this buy zone here, and they had missed this buy zone here. And then they come back to you in 10 years and say, "Oh, well, I fucking bought RK at fucking $170 when we were talking about RK at like $9 or $6 or $3. You get my point? I'm not saying RK is a good investment. I'm saying that these guys always come back and say that after the move's been made. So be aware of that as a bull, that you'll hear that, "Well, if we're not going to turn here, Cap, why would I bother buying it here?" It's because outside headline news, outside events can take place that nobody can predict. I want you to be aware of that. There are things along this route that we're taking, right, that you cannot predict. You can somewhat. Some Elliott waivers will say, "Oh, I can predict that, Cap. It's just like that. This is just like that. It's distribution, Cap." And I agree. I don't disagree with this at all. But my point to you is that these are the places. These are the places for you to be buying bottoms at. Okay, we'll get rid of this bullshit. That's the rant for today. I had to get that rant out there because I haven't talked about that rant in some time, and it really has been a while. So we're gonna take a look here, and we're gonna snap some lines here for you guys to see. 365. I want you to keep your eye on this one. 365, and then 360 here. Okay, we're gonna look at both of these, both important places. And we're gonna start to snap some lines here for you guys, so that we're ready for the next buy. In just a second here. We got a nice trend break of 365. We're gonna add another one in here. 360, is that showing up? Sweet. Okay, so we've got 365.09 here. We got 360 right here. So you got 365, 360. These are both major support. So we're gonna tag these right here. See if you guys can see these or not. I'll put them here on the screen so you guys can see them. So there's S1. You guys can see it right here. You guys see this? That's S1. That's support 1. Your second one is going to be right down here, 360. Sorry, I usually am prepared for this stuff when I do a live stream, but this morning I had to talk to my attorney, and then I had to my lady was not wanting me to work today. She was offering up something that most men cannot offer up. So right here we get S1, S2, 360, 365. We're going to look here on, we have more sellers than buyers currently. Actually, we get some buyers stepping in. We've got 360 or 365 has been broken right up here. You can see this band. We'll put this back here. Slide this over a little bit. And you can see down below here, 361.51, we're going to keep our eyes on. But in reality, we've got a magnet down below. This is 358.61, so slightly below this S2. Well, we should see some support in here at some point. And then I want you to see that we've got nothing below this 360. You kind of have, you see right in here, it's a couple little bands in here, but in reality, we've got nothing until we get down to 350, 348. Major support down here. So if we get a trend break today, hold on here. Hold on a second. If we get a trend break here today, you're going to be looking for, I'm going to put another line in right around here. Right here. And we're going to change this to small. And this is pretty much your trend break down here. So if you have, so I'm going to assume this is the vol trigger as well today. We'll just write this vol trigger. I haven't even looked yet. You can usually figure these out on your own, though. You really don't need fucking like spot gamma and all these other fucking. Pretty simple to figure this stuff out. So your vol trigger is somewhere down in here, or at least my volatility trigger. Anything below this 358. If we were to, let's see if we can do it. If we were to sell this down here and then bounce back up, right? We haven't broken the vol trigger. If we, right? See, this would be the deepest bottom you should be buying today if you're a bull. If you're a bear, right?
President Putin saying we are interested in cooperation with China, but because of its potential and not due to recent geopolitical development.
Other than a day trade here, and even this day trade's kind of risky. If you're bearish, you're looking actually for this. You're looking for this break, right? And you would look for something like this. And watch my cursor here. This would be the move. If you see like this isn't the move here, this actually isn't the move either. Any of these are dangerous if you're a bear. If you were to buy this and we had bounced, you'd be fucked. If you buy this, right, and it ends up going up, you're fucked. If you buy this and it dips right here and rips higher, you're fucked as a bear. So as a bear, and the reason for this too is because puts don't really pay unless you have large breaks. You need a full break usually for puts to pay enough, for me at least, for the risk that I'm taking. So if I want to take risk as a bear, right, and take a bearish trade, I'm looking for this kind of a break here because I know if we break this, that we're going to go down 100 points. I know we're going down 100 points more. I'd rather take that 100-point move with no risk of a bounce than take this move here on a risk of a ripper.
President Xi calling on countries to quit decoupling through unilateral sanctions.
That traps me as a bear. So this is a buy the dip environment right now. Down below is sell the rip environment. So be careful of this today. If you follow my cursor, anything in here is a buy the dip environment. Anything down below here is sell the rip environment. Okay, so just be aware of that as we trade the rest of today away. You get this out here for you guys to get rid of this. And you also be aware this morning that you're going to have more amplified moves here, right? You're going to get more severe dips, and you're going to get some big rippers here today. If you're a bear out there as we head into July 1st, right? Or June 30th. From today into June 30th, you want to be looking for places. If you're a bull too that wants to protect your investments as you buy dips down here, you want to have predetermined places that you're going to put your hedging on. You're going to put your
President
putback,
Xi saying that the Chinese economy has a strong resilience and full potential.
that you're going to put your putback spreads on. So if you're looking for, let's say you're like, hey, Cap, we're at 370, right? Or Cap, we're at 370. Where do you think we can go into July or August? I'm going to tell you that we're more than likely going to have a trading range, a bottom trading range into July, August of 350. You're going to have a top trading range into July of August of more than likely. Let's say we close this quarter green. Let me take a peek at this real quick. Give you a top range. Top range more than likely 410 for somewhere around 410 for and into July and August. So if you're looking for Q3, puts, you're probably going to be looking for somewhere around that 410 area to grab some 350s. And if you're looking for some deeper puts, like, hey, Cap, I want putback spreads that are way outside the money. I want to put some nasty ones on. If you're going to buy puts for 320, I would be looking for a farther dated expiry. Look for something towards the election. So you'll grab some October's or November puts down to 320, 300, somewhere down in there. Okay? And that'll give you the time in case we do have a green. So if we have Q1, Q2 red, you should have at least a slightly green, if not green, Q3, and then you'll get a nasty fall. You're going to get all kinds of, usually on a presidential year where it's a midterm election where there's no presidential election, and we have contention this year, right? We'll talk about that later today. The politics that are involved with this year's specific midterm election and how it relates to the market, and we're going to talk about the presidency today as well. So you can see the dip buy coming in right now. So the point that I'm trying to make to you on this is that you want to think about your hedging into the fall right now. You don't want to be thinking about hedging right now you don't want to be thinking about hedging right now for July, August, as in, hey, I'm going to buy some 320 or 280 puts. Let's say for September. You want to buy them for that next quarter. Throw an extra month or two on them. Throw them down at like 280. Between 280 and 320, and they should print fat for you. Now let's talk about presidential election real quick. How it relates to our markets. So I haven't spoken about this on Twitter because so you're seeing a dip coming in right now. Bulls starting to step in, trying to buy this dip. So you can see these big green bubbles down here. It's a good place to buy a dip, probably. So, I gotta place a trade here. So had some nice calls come in just now. XLE, July 15th, 76C. Golden ticket, $1.9 million. So that tells you that gas is going to go up again, right? Oil is going to go back up again. So I'm gonna place this XLE trade here. So hold on here. So let's talk about the elections real quick, okay? We're going to talk about when I was young. So when I was a young man in this market, not even in this market, I was just a kid, I could not remember Jimmy Carter. The only thing that I remembered of my childhood, that I was a young child then. But what I do remember is Ronald Reagan and when he was elected president. And the point that I'm trying to make here is that, if you look back at Jimmy Carter, not a bad president. Fed chair, not a bad guy. All these guys were like, generally speaking, even if you don't like them, even if you don't like Democrats, they were to some extent trying to do well for our economy, for our country. But the truth of the matter is that when a voter that pays taxes gets into the voting booth, they'll tell you publicly, they'll tell their wives, they'll tell their friends, they'll tell anyone out there. They'll say, yeah, I want cheaper housing, I want cheaper taxes, but I'll pay for social services. They'll say, I want this, I want that, I want a good economy, I want a strong United States of America, I want all these I want to help this person and that person, all this stuff, right? But I'll promise you, when they get into a voting booth, if shit is shitty, if they're paying more taxes, if their mortgage is underwater, if they're paying extra for gas, paying extra for food, if everything is horrible, right? They've got huge interest rates, huge insurance rates. If everything's shit in a handbasket, right? They're going to look for one thing.
Fed issuing their semi-annual monetary policy report to Congress, saying commodity markets saw temporarily stress due to the Ukraine war, and their commitment to restoring price stability is unconditional, saying most indicators of credit quality remained robust. Lower equity prices and rising bond spreads eased valuations, saying recent strains in stablecoins show structural fragilities, and employers continue to report widespread hiring difficulty. Comments from the Fed semi-annual monetary policy report to Congress.
Now, the point that I'm trying to make behind this is this is the point that I'm trying to make.
Fed's report goes on to say vulnerabilities from non-financial leverage are moderate, and leverage in the financial sector appears to be moderate overall.
Now, the point that I'm trying to make to you about this is that
Fed also saying that recent indicators suggest that private fixed investment may be moderating, but some consumer spending remains strong.
And you gotta remember that I'm a Democrat, so I don't know if you guys know that or not. I'm a Democrat out there. For any of you that don't know, think of me like an old school Johnson type Democrat. So, but I'm fiscally responsible, all that other kind of stuff, right? I'm not really a neo-libertarian. I think they try to pin people like me as a neoliberal or something. I'm not even that either. Now, even with me saying that, what I do remember is Reagan, and Reagan spent, and we started to live great again, right? When Reagan came into power as president. They're going to be looking for candidates like that my point behind this is that if you're a bear listening to this is some risk down the road. So if you're looking at the midterm elections for the Senate and for the House, you're going to have people running for office. They're going to tell you as they're running, I will fix the economy for you. That means QE. They're going to tell you, I'm going to lower your taxes. They're going to tell you, I will get the price of oil and gas to go down. And those people will get elected. You will see people that actually have jobs, that people that have been laid off, people that their wages are lower. You're going to see them go out there, and they're going to vote for these people. And they're going to tell their wives, you guys don't believe, but this is true. And there's an old term for this called it's taxes, stupid, right? And that idiom encompasses more than just taxes. It encompasses the quality of life people have. So they'll tell their wives, I didn't vote for these people, and they did. So you're probably going to be looking for the emergence, and this isn't the QAnon crowd or the Make America Great crowd. You're probably going to be looking for an emergence of a political class of candidates into the House and Senate and then into the presidency that are going to look more like an everyday, middle-of-the-road kind of a man or woman that's going to fix the economy for you and fix the stock market and fix everything for you. And they're going to come in Democrat shades of Democrat, shades of Republican. They're considered populist. Trump's wasn't really a populist. He is and he isn't. He started out as populist, then he switched to that weird shit he was doing. But you're going to find a real populist type candidates come out of the woodwork. And what they're going to their potential that they have to do or could do is reinstitute some form of QE, either in the Senate, in the House, and the presidency. And this is outside of the Fed. This is where they spend trillions of dollars to hyperinflate our economy yet once again. So with that in mind, if that's my take on if me as a trader, as an investor, is looking at that down the road, there's only a couple things that I can bet on as a bearish bet. I'm going to look for volatility into the midterm election, but not after the election. So just leading into that election, I'm looking for some volatility in September, October, and November, right? In that area there, I'm looking for some volatility. I'm not looking for volatility after that time frame. So I have to plan for strategically I have to plan for two things. I'm going to plan for some kind of a pump this summer, even if it's small. I'll bet it could be small. I'm going to plan for some kind of an inflation of the market. I'm going to figure to myself that I'm not the smartest guy in the room, and that even the smart guys know that that's more than likely going to happen because they're going to expect volatility heading into September, October, and November. Does that make sense to you guys? So when you're planning, you're strategically long-term hedging on the market. Consider that. These guys know this. Guys like J. Powell know this. They know that even if they're going to sell this market down, they're going to fluff it. They're going to attempt to fluff it at some point in this summer for realized volatility heading into this not September, but November election cycle. And they're going to plan on it again, even farther down the road into the presidential election in 2024. So keep that in mind as you place your hedges next couple days. Dips still being bought down here. Recapturing that same line from down below, right? Talked about this just a few minutes ago. What did I say? I said this is not the place to be taking short here. This is the place where you can get trapped, right? You buy dips here and you sell rips below my cursor over here on the left, right? That's what I told you to do, right? Now above, let's take a look at above. This was S2 over here, right? This now turns into some resistance. You want to see a break above this here. We want to see no rejection here. We want to see us be able to take this trade higher. Now, if we see a rejection here, you're going to get more bearish. Now, if we break above this, you're going to stay bullish, right? So we want to see a break above this and a continuation higher here. Next levels above, we've got 370, where we'll put 370 up there. We had this level from yesterday, so we'll put this on this chart here for hold on a second here. Give me a second here. At the close, I told you 370 is first target. We're going to buy 372s. So we've got that 370 there. Our next target above is going to be 372, just above here. So we've got some price targets above. We tagged our first one, basically 370. Actually, that VWAP yesterday is probably that. Oh, it's not on this chart. That VWAP from yesterday, I think, was at 369.37, if I recall. I don't have the laptop that I was using yesterday is different than the one that I got up here, so it's different charts. I'll take a look at the VWAP from yesterday. I think I posted on Twitter. I said your price target is the VWAP line or something. Let me take a look at that real quick. Hold on. Just give me a second here. Let's see where that VWAP line was yesterday. Yeah, look at that. Tagged it almost perfect. 369.08. Tagged it perfect off the bell today. Look at that. Blasting higher. So I came in and I was blasting. I was buying dips and I was blasting. I'm looking at this right now, making money right now. Hold on a second here. I gotta keep my eyes on the VIX over here real quick. Just a second here. Nice little tradable area in the VIX. Excuse me. All kinds of calls coming in right now. SPY, tons of calls coming in right now. Got hedging calls coming in. SPY, Apple, Plug, AMD, QQQs. I got the SPY, July 1st, 360C, $1.6 million. Got another $2 or $3 million on at the ask calls on the SPY right now. So I was blasting. Right? Is this bullish? I want to know from you out there. Is this bullish or bearish? If you're a bull right now and you're looking at this, is this bullish or bearish? I can tell you what it is. You guys should know what this is, right? It's bullish. I'll tell you right now that it's bullish. That's bullish. That's bullish. So that's good. So we'll stay in this trade here for just a minute. We're going to look for our next price target. And we see it above here. We've got 366.87, 367.39, top range 368.61. So they're going to try to roll it right above here. They're going to try to stop it as we come into this zone here. It's possible. So we'll wait and see. Press play here. We'll give you guys a better viewpoint of where we should be heading here. Top range at the moment in this intraday trade is probably this 368.36 or so. We'll see if we keep getting let up here. We'll put a little. We'll move this around this afternoon here. I'm gonna change my I gotta change my stops real quick. And put that right around there. Oh, it's clear. It's 367.33. Right here. So somewhere in here, I'm looking for a target above here. We'll see if we can break through that. If it still leads us up and we're going higher, bulls are in charge right now. You can see that bulls are in charge. We have another target above. I said 372. We've got 370.63 is the next one. So we'll put this one here. Right there. So you've got two targets here. You're going to be looking for something like this. Or even, oh, wait a minute. So what I'm looking for is something like this. We'll see if that happens. I'm not seeing what you guys are talking about in chat right now. But all I see right now is your wife's boyfriend saying they were just in here boo-hooing. I'm assuming that some bears just got their shit pushed in trying to fucking sell this market just now. That's what I'm going to assume. That some bears just took it right in the ass. No offense to any of you bears out there that are smart. But any of you dumbass bears out there that are getting smoked right now on your puts, suck it. Suck it all day long. Make your own live streams. Make your own trades. Make your own Twitter handle. Do whatever you need to do out there. Do whatever you need to do out there to make yourself believe you're a winner. Go in a mirror and tell yourself you're worth it. Do whatever you need to do. And I bet they're gone right now too. If I had a fucking bet that they're gonna go on tour and say, yeah, I closed out my shorts down here. They didn't close their fucking shorts out. And I'm actually trying to help a bear out here. Where do you take a short position? We're in OPEX. This is the time to be thinking about what's going to happen in July, August, September. This is the time to be thinking about what's going to happen in September, or excuse me, October, November, December. This is not an intraday trade time where we're like, yeah, we're going to trade it up, we're going to trade it down. This is from today into the 30th. We're going to be talking about the next quarter. We're going to be talking about what's going to happen, or what we expect to happen in the next couple quarters, and how do we plan for that for the next couple quarters, and not to get riled up on, hey, we're gonna crash the market today. That hasn't happened yet, right? Have we crashed the market yet today? Can anybody out there tell me we've crashed the market? Do we limit down overnight? No. It's now 11:14 in the morning. Have we limited down yet? No. Do I think we have risk to limit down overnight? Yes. what's my limit down? What's our limit down risk? It's the yen 100%, and more than likely the crypto shit. If there's two things out there currently that can force, no, and there's two others too. I'll give you four. First one is, of course, the yen. That is the biggest one, and probably the yuan would be number two. So you've got China and Japan, and to a lesser extent some other countries that invest in our bond market. They're removing their money from our bond market to, this is the simple explanation, to reinforce their yuan and their yen. Now, that's a big one. Now, we've already seen most of the destruction in our bond market from Japan doing reinforcing their yen. The second problem that we have right now for left tail risk is going to be the destruction in crypto. That was far-reaching. That hurt some banks. It hurt companies. It hurt individual investors. And we probably haven't seen the ramifications of that yet in our market, the real ramifications of that. More than likely, there are people in the background that haven't yet disclosed how much damage is going to be done. We're going to talk about the earnings season 2 here on this same topic. So we've got those two issues, the yen, we have crypto, right? That's your second issue. The next two issues would be companies too big to fail that can fail. You should see some of that coming down the pipeline. Do I think it's today? No. But I think the risk intensifies as time passes. So that is a real market risk. And I'm not talking about like a bank that's too big to fail. I'm talking about a company that is unexpectedly to fail. You would see it, and I'm not claiming it's going to be Apple, but more than likely when we trigger these moves, it's usually a company that you thought couldn't fail. Not one that you thought could fail. It's usually one that fails that's very big, very large. It'd be like a Walmart failing tomorrow or an Amazon failing tomorrow. Not even Tesla. It would be like an Amazon or an Apple or a Walmart or a Home Depot that you would see fail. As a matter of fact, I remember back when I was a kid, they had Home Depot and they had another company called HQ. I think Home Depot bought HQ. I'm not sure, but at that time when I was a kid, when there's explosive growth in the hardware industries, right? Hardware stores. There was consolidation of hardware stores. You thought to yourself, or of course, I think my dad and I, you could tell that HQ was going to fail. But at that time frame, you saw failure in that company. So you would see something like that today, like a Lowe's declaring bankruptcy. I know they cater to a different crowd, but you'll see something like that as time moves forward. So that's your third one right there, is that kind of a failure. And your fourth one would be a break of the real estate market. Now, yes, people have been out. I'm in real estate, so and I've got, as a matter of fact, my attorney's in real estate. So we just actually talked about it because he looks for certain signs, and I look for certain signs of the real estate market turning over. And this isn't just housing starts. This isn't just permits either. This is, you're looking for other things. I'm not looking for just a lower demand rate for people buying houses or a house just sitting. So my attorney, he's focused on that stuff. He's like, we have less demand right now. We've got houses sitting slightly longer. Still have people requesting mortgages. People aren't getting 20% over the ask. They're not getting written offers, but they are getting offers. What I'm looking for is unfinished rehabs littering the market. People, real estate investors panicking. I haven't seen that yet. There are these groups on Facebook that I watch. Like here where I live in Michigan, we've got like Michigan real estate investors groups on Facebook. Those guys are all honest. There's like a group of them, hundreds of them, and they honestly come out and say, "Shit, this is happening," or "Shit, that's happening," or "I'm making bank doing this." So I monitor those kinds of things, and I track foreclosures, tax foreclosures on properties. If you can't pay your mortgage and you can't pay your taxes, things are ugly. Now, the time frame for when that happens, when that market rolls over, probably a little bit longer than this week. I know that it's going to get priced in right now. You see it in these companies that are building houses for rent. currently, and you're seeing the real estate market in our stock market pricing it in right now. So it's a good place to be shorting. But as far as the actual event taking place when we get a market break, the risk to a market break, that typically doesn't happen until there's blood on the streets of the actual economy, Main Street, USA. So those are probably my four big ones for market risk. And then the other market risk one would be if someone gets elected that isn't that Reagan-esque type cocaine-fueled orgy candidate. And you know what's fucked up is if that person gets elected, I'm going to switch my viewpoint to bullish, which is completely awkward penguin. But you have to be aware of that as we head into that Senate after that volatility and that presidential election. If you get somebody that's gonna that wins any, like if they win a majority of seats in the House and the Senate, if they win the presidency, whoever that person is, it could get crazy. You could end up getting like someone in there that doesn't matter if they're Republican or a Democrat. They're just gonna let the money flow. They're literally gonna send our deficit to the moon or to Mars. Like we already have with the moon, so they'll send it to Mars. And I know that's like an awkward penguin kind of a thought process, but I spoke about this on another topic a couple of years ago. And I think we spoke about this on Twitter. Is that I said oil and gas is going to go to the moon, and people said why? And of course I'm a Dem, and they're like why? Biden got elected, Senate's Democrat, and I'm like, well, if there was a Republican Senate and a Republican president, I would say oil's going to fucking dump. Whenever we have the opposite of that, you'll see the prices go up. And so I'm going to say the same thing again. It somewhat relates to our elections. You want to have a keen eye out there watching who gets elected and what their platforms are. If they're telling you they're going to make life awesome sauce for everybody out there, they're more than likely going to raise our deficit. They're more than likely going to raise your state, your local, and your country's deficit, one way or another, either through tax cuts, in debt, unless someone gets hired or gets elected and they're like, fuck it, we're going to go through a depression. We're going to truly rebuild all our roads. We're going to give jobs to people, and you're all going to lose your homes and be living on the street. You get that guy elected or that woman elected, sure, I'll stay with that mantra that the market's not going to pump to all-time highs once again. But just be aware of that as time goes on. Keep that in your back burner and as it relates to the stock market. As far as your personal politics are, I don't care. I don't care what your politics are. And you shouldn't care what my politics are either unless it relates to the market. And that's a big one. I think that's the one that I've got eyes on that I'm most scared about down the road is who gets elected and why are they getting elected? What are they going to attempt to do? And I'm telling you what, it reminds me so much of when Reagan took power. And it's something you should look into. You should look into whether you liked Reagan or disliked Reagan, but look into the impact that he had on our economy and our stock market and the ramifications of that and how it impacted our stock market too when he came into power. And yeah, it's important. Anyways, and I think we'll be discussing that down the road. I think this will be a conversation that we will have next year. Next 2 years, you'll start to see that conversation come up. Okay, so we got that little bit of failure above here. We talked about this rejection point here. This is at 367.56. You saw us reach up here, a little bit of rejection. You're going to be wanting to see this VWAP on the left-hand side of my screen. Or you want to see this VWAP kind of hold. You might get some failure down here. Back to this trend, this little trend bull flag down here. You want to see this hold. If these 2 points hold here, we should see our next move higher to
Belgium to sell up to 3.7 billion euros in bonds at auction on June 20th. That's Belgium.
So we'll match this up here for you real quick. We'll see if we can get the left and right hand side here to match up. I think that's 371 right there, just like that. Here, let's see if we can get that. It's kind of matched up. You see both sides of the screen. You're going to be looking for this support level down below here. This is at 364.47. Yeah, so right in here, you should see this support hold here. We'll see if it holds. Looks like it's going to hold. You see the orange bar coming in. See this big fat orange bar down here? This is showing you support here. And we should make our next move up higher to 371. We do have some puts coming in right now. All small money. It's all like, well, I got a little bit. We got 617, 365p, $600,000 on the SPY. Apple. These are all day traders. $78,000, $16,000, $14,000. All day traders. I'm not seeing any hedging at the moment yet. Another key point is I see HYG calls July 1st, 74C for $300,000. And so that person doesn't think we're going to burn it down right now. So I'm going to check in right now on your comments and see what you guys are talking about. Yeah, you know what? So Best of TikTok just wrote Kanye 2024. Let's talk about that briefly. I think you're going to see something like that. I think you're going to see like, this sounds fucking crazy. I think you're going to see something like The Rock, Dwayne Johnson. You're going to see, you'll probably even see the Democrats come out with somebody. You're going to see like, I think you're going to see a populist candidate for both sides, or at least one side. I don't know which side, but I think you're going to see a populist candidate come out there, and they're going to seem on the surface. And I don't think they get weird and shit when they're president. I think that you're going to get a populist that everybody can get behind and everybody can vote for. It's going to be fucking bizarre. I really do see that. I think you got Biden because they were like, "Fuck it, we're done. We want to fucking calm down for a couple of years." I think people. I swear. I think people were just like, "I'm done. I just need to chill the fuck out. I need a break." But I think your next president more than likely is going to be a populist. I think they're going to be like, yeah, like Yeezy. I don't know who it's going to be, but I'm telling you what. Yes, YE. Yeah, John Cena. It's gonna be. I think we're gonna be shocked. I think you're gonna say, "There's no way that guy's running or that woman's running or whatever, whoever it is, man, woman, them. It doesn't matter." But I think you're gonna see some kind of a populist emerge, and they're gonna seem to everybody out there that you can trust them. And that was key about Reagan was at that before he was president, he was just an old movie star. I think he was an NRA president too, but his key points that he wrote on that I remember as a child was he made you feel good. Like he told you things like, you're going to get your house back, you're going to get your wife back, you're going to get your dog back, I'm going to take care of all the minorities out there, I'm going to take care of everybody. And sure enough, they voted for him. and sure enough, they raised the deficit, right? Sure enough, they spent like crazy. And things were great, right? Everything was peachy until just before, and he stayed in 2 terms, and then of course you had the next crash at the end of his 2nd term, which is kind of fucking crazy, but it makes sense to me as now that I'm getting older. When I'm looking back in history, I'm like, yeah, we do this shit over and over and over again. You can just see the cycles as they happen. Nice little support check there on SPY. We'll look to see if it goes up higher here. Trades up to this 370. We'll check it on Tesla real quick. I know you guys always like looking at Tesla. Support check down below at 620. Yesterday at 624, I think 625. There was good support down to 620. I was telling some people, or that's not 620, excuse me. We had a support check at 625, I think, yesterday. Broke slightly below to 624. There is major support down here on Tesla, so I want you to be aware that if we experience some weakness into the end of this month, that you're going to be looking. If you're a Tesla bull, you're looking for. If you're like, hey, I want to do a dip buy cap, it's more than likely at 600. If you see a break of 600 on Tesla, if you're a bear, you're looking for. If you're a bear and you want to get bearish, you're looking for a break. Not on Tesla, but the market, the stock market. You're going to be looking for a break of 600 and a rejection of 600, right? We break below 600, it rejects off 600 once or twice, and then there will be a huge move down. I mean big, like 500. I think I even looked at 440 as being on the table. But until that breaks, you can't get bearish here on the stock market. You can't get bearish on Tesla at this point today where we are. At this point where we are, all I'm looking for is bounces off 620 to 600. It's all I'm looking for right now. And the only time I'm going to get bearish on Tesla at this point where we are today is when we break below, or we break through 600 here. Okay, I want you to keep your eyes on this. Have market awareness as a bull, have market awareness as a bear, and know that there's huge demand down here at 600. Huge. So I'm looking for a bounce off 600, 625 to 600. But in reality, trading range wise, a bounce off 600. If we break below and it's not rejected, let's say we get to 580, it's still a dip buy. It has to reject. Can't break through and bounce higher. So just be consciously aware of this on Tesla. You could use this, believe it or not, as a market or as a market gauge right now. So if you were like, hey, Cap, are we selling this market down? Sure. You want to sell the market down? You need to break 600 on Tesla and reject. So you break through 600 to 580, and you actually don't recover that 600. And then I'll tell you,
We've gone through the cash equity close across Europe. European bourses finishing a bit mixed now with the FTSE in the red. The Stockholm Mixed Stock Exchange and the Swiss markets also finishing in the red or flat, while the CAC is a little changed and the DAX was up 0.6%.
So we're going to look for that 600 as major support for Tesla. Major support. That also means, how does that impact the SPY? It shows you that today, when the stock market opened, we looked below and there was giant demand. Like, hey, I'm down here, I want to buy you, right? So where are we going to gravitate towards to supply? So we're going to trade higher here right now, and we're going to head on up. There's that 371 above. To a lesser extent, we've got sellers above here at 373. But on your right-hand side, I want you to see something here, okay? I want you to keep your eye here. See this 100 here? 108 sellers right here, 106, 109. That is right at the top here. 369.46, okay? 369.46, which is right here. Right where this previous high was, right here. Okay, this is where some real volatility begins. Right at this previous high, you're going to see a little bit of volatility. Crazy town. Price prediction for Tesla for today. I'm not really. If you want to talk about Tesla, where you should be buying, if you want to do a safe bet, you just do an in the money call spread on Tesla. And Winky and I were talking about this earlier in the week on the phone. Maybe it was last week. I can't remember the exact day. It was last weekend or something. We were like, hey, it's going to be weak into end of June. Or I think Winky said, hey, Cap, historically, we're going to be weak into the end of June. My point was, I agree, but we're down, 12% on June. The average is like 8 or 9%. No, I think the worst is 8 or 9% into June. So into the end of June. So I think we're stretched to the breaking point of a low June. Winky point was, but we could have volatility or still weakness into end of June, Cap. So if I was thinking about my conversation with him, with my take and his take on it, I would say to you, if you're going to buy a dip on Tesla, I would say anywhere between 625 and 600, buy a call spread. Make it simple. You don't have to make it hard. Just make it simple. And when do you cash out of it? More than likely the last expiry before the 4th of July weekend. Let's take a look at what that date is. Let's look at Tesla. We'll take a look at Tesla right now. So that would be July 1st. But because there isn't July, is that the Friday? Let's take a look at that. Yeah, that's the Friday. If you want to do some safety and be comfortable and confident, credit spread, 50 delta outside the money credit spread, or a 35 outside the money credit spread. You could because of the directional movement of it, you'll get paid before the end of it instead of having to hold it to the absolute end. You could buy an in the money to a 35 or 50 call spread for July 1st or 8th. If you want to take the safer trade, you've got the 8th. I'm looking at it right now. Oh, and shocker. Surprise, surprise. There's a bunch. This is hilarious. There's a bunch of interest on July 8th, 700C. 700Cs. So I'd do like a 625 700C credit spread expiring on the 8th. I'd be looking to take profit on either July 1st or July 8th on it. If you're like, well, hey, Cap, what if we burn the market down and break below? I just gave it to you. I told you. You've got major support at 600, right? You know where to cut your losses. You know that if we start to break down below and reject off 600, that you have to take your loss on that. Now, my other take on spreads is that if they don't print heading into that date right away, if they don't start printing, if you've timed it wrong when you bought it and the market all of a sudden reverses on you, sometimes because you've lost so much money, I'll say you just hold on to it until, well, you can do this a couple different plays. You can cut the call, or I guess we're talking about credit spreads, so it's talking about buying and selling of puts. But you could cut the sell side of the puts, and then you could keep the buy side of the puts to make money on the other end. The option I usually use is I just leave it on, and it will usually print due to time, and shockingly will come into the money like the last hour of that trading day. So it wouldn't shock me to see, let's say, a July 8th 700C print the last 15 minutes of July 8th on Tesla. Does that make sense to you guys out there? So you could pick the wrong strike or the wrong swing in the market, and you'd be like, oh, my call spreads are fucked, and you dump them, and then you go back later and look and like your hindsight trading where you actually track your trades and go, shit, that would have printed that last day. And that's off. You guys ever noticed when we're on a daily, weekly, midweek OPEX and a monthly OPEX? You ever notice as we head into that OPEX date or the last day of that month, you'll see the market get pinned? That pinning is printing banks' spreads. They want that spread to print at that price so they can get their max money out of that trade. That's where the control of the market comes in from banks. So any guys that I trade with banks typically, so you'll end up seeing that the last day of that trade that they're in and that you're in, that it'll magnet. And there'll be panic through all that. You could be down like 100 fucking points, and they'll drag it straight up to where their trade is, or drag it straight down to where their trade is into those expiries. No, so I'm still sitting here waiting. We're just gonna sit around and wait here. See if this 365.12 holds. We have it listed down below here. We've got one tap over here on the left. We'll have one more test here, and we'll see if we can blast this off. So that's the Tesla trade I would take. Do we sell it down into earnings? Maybe would be the next question on Tesla. It's possible. If there was a ticker in this market that could trade down into their earnings, that could be Tesla. They have a tendency to sometimes do that. So if you really wanted to be really safe, you could take a call spread after their earnings. If you're like, Cap, I'm really bearish into Tesla earnings. And this leads into the last part of the conversation that Winky brought up, has been bringing up, is he said, look, we're coming into earnings season. And his take was we should be sideways and weak into the beginning of July, and then a ramp, an earnings ramp. And his point also was, I want to talk about this real quick. This is important to talk about. So his point was, bears for years, every quarter, bears say that earnings season is going to be bad, and it never is. Now, I agree with that statement, or they don't sell earnings season. But outside of overnights, which is just pure gambling in earnings season, typically you see the indexes trade kind of sideways recently. You'll see like a slow grind in the indexes, and then you have to play each individual ticker. So do I think that they save the stock market, quote unquote? Yeah, I think we trade sideways and down or sideways and up for earnings season. I think you see the markets get pinned, though, in that range. I think it's more focused on individual tickers for this year. So if I'm looking at Tesla, does it trade down into earnings season? That's possible. But you've got a key indicator. You know that 600 is going to be your key support. You know that if we break that 600, what that tells you into their ER season. If you see that break of 600, you can almost guarantee they're gonna trade it down into their earnings in late July, mid to late July. So same thing, right? So I guess if you wanted my take on earnings season, and how everything is lining up, yeah, I agree with Winky to a point. Like you're probably going to get some sideways and slightly up into the. I want to say into. Let me get a calendar up here. Probably into the 30th, sideways and down, sideways and consolidate. Some great day trading. Next couple weeks, have some great day trading, and then slip yourself into a low. Look for a low in the market to buy earnings season on your favorite tickers. So if you're like, hey, I want to buy. I think what? Fucking. I think Piton's going to come out with a new vibrator. You can look for weakness, of course, and generally in the market for the next 2 weeks, and start to place your bets for a ramp into the first, the third, or where we close the third, fourth, fifth, but a ramp into earnings season. Yeah, Winky's saying JPM reports on the 14th, the one that actually matters. Yeah, we got bank week, right? We've had major weakness in banks too, haven't we? Let me take a look at XLF real quick. And I saw some XLF right tail hedging come out yesterday. This would be a print, right? So the highs on XLF were 36.67, most recent highs. We got bank earnings coming out in the middle of July, right? So we're at the end of, it's 6:17 right now. So if you took, I'll look and see right now what these calls were. I'll take a peek for you right now. There were some hedging, right tail hedging on banks. Now, also, if you're a bear or bull out there listening in right now, this isn't banking on a good ER report from the banks. This is just banking on the premium, the interest, right? The interest in the event itself. So you usually, if you're buying these now, you usually sell them before we ever get to an ER report. There's kind of two ways to trade, 2 or 3 ways you can trade earnings season. The responsible way to trade an earnings season is, I think company X is going to trade down into their earnings season, or I think people are going to buy calls, right? So you could be selling calls into their earnings, right? Outside the money calls, buy the underlying, especially, you notice here a great one. So if you don't have a lot of money, look for anything that's been whacked. Like look for like a snap or something that's been squeezed a few times, doesn't have a ton of short interest on it, but that you expect to trade down and sell outside the money calls on it, and then you did them for just before their ER. Oh man! So let me take a look at XLF in here and see what I can find in XLF. I saw some come out, some right tail hedging come out on XLF and XLE this week. I've seen. Hold on here. All right, so scratch that. I thought it was calls. So this is what I'm looking at. I've got in front of me, I'll post this on Twitter right now. So for this week so far, we've got August 19th.
Russia's Putin saying that Russia has nothing against Ukraine joining the European Union.
So I'm gonna post this on Twitter for you. So we've got some hedging on XLF. They're buying August 19th, 33 Ps. Yeah, August 19th, 33p for like $10 million. This is the one that you want to be looking at. I'm gonna highlight it here. I'm gonna post it on Twitter for you so you have it. Hold on here. Give me just a second. They're dated for 8/19. Hold on here.
Putin's saying that if Ukraine joined the EU, become a semi-colony as an EU member.
They bought them. So you want to see if they're? I'm going to check to see if they're still holding these. Hang tight. So XLF. Before I post this, I want to see if they're still holding these. August 19th. And they're not really in them anymore. They left a little bit on, so they've already printed. So if you look at August 19th, the options chain on August 19th XLF, they've still got 1.45 thousand contracts on. Not really huge. Originally they had, so I'm not going to post this on Twitter. Originally they had how many contracts? They had 55,000 contracts out there. Looks like they've taken profit at this point, and they've come into the money. So they made this trade on June 15th, just 2 days ago. We were at $32. They bought these puts, and it looks like they've monetized some of them, and then they left some of them on. So it looks like the trade's been paid for. If I had to guess, they placed the trade on. They got paid on paying for what they wanted to leave on. Now they're on a free trade. So they've got 2,000 puts that are basically free into the ER season. I'm not going to post this one, but this is a key here, is that you've got the hedge down to $30. They've got on XLF. I'm going to expect XLF to actually make a run. Usually banks sell off into their ERs. That's actually the typical, I think, for banks to sell off into their ERs. But there is still interest on that 30 put. So August 19th, 30p. They're going for $1.18 to $1.22. Not really a huge spread on them. I'm not seeing any calls out there. There's no OI on calls on XLF right now. So we've got the 30p. All the interest is on the put side right now, it looks like. 30p, $1.18 to $1.22. They paid, what do they pay for these things? That's not showing me what they paid. I could do the math on it, but I'm not going to. You can do it on your own. I think, so the puts they put on was, hold on here. One block was 44,052 contracts. They spent $6.3 million. So you can do your own calculator with that and find out what they paid for them. Looks like they've made a little bit of money. Probably 20% or something. But 30p for XLF. So we'll look to see if this holds. If this does not hold, we're looking at 363 as the next level down below. On the SPY I'm talking about. So I'm going to go over one quick thing with you. We're going to talk about where support and resistance is. So 3,700 is real support. So we want to be able to we want to try to get back up into that today, 3,700. This is a note from Spot Gamma. It says that it does not appear that we lost much in the way of puts. Matter of fact, I'll bring this over for you guys so I can read it to you. Take a little break here. We'll start right here. It does not appear that we lost much in the way of puts yesterday, with 30% of total S&P deltas expiring today. This indicates that a lot of the put fuel, in which could spark a rally, is still in place, right? So it's still there. It hasn't been spent yet. It wasn't spent yesterday. The critical positioning here, is best captured through the gamma chart shown below. Now, how the teal line, today's gamma, shifts markedly higher after today's OPEX, the black line. This shift is due almost entirely to large puts rolling off. Further note, the kink in the teal line at 3,700, which is due to the 35,000 at the money puts, which expire at 9:30 a.m. Eastern Standard Time. We saw that rip off of the open this morning, right, due to those expiring puts. Placing this expiration in a historical context is our delta tilt indicator, which measures put delta, call delta. You can see that we are at March of 20, December 18 levels as a result of these large puts. You can see it right here. Okay. You can see it right here too in the past, right? You can see this right here. I want you to take a look back in here. December of 2018, right about here. Okay. And I want you guys to take a peek at this so you can see what happens thereafter. Typically, we get going a slight run higher. This would lead us into middle of summer. As a result of these large puts, expiration will force this metric higher. See red dotted arrow, bottom right-hand side. Okay, you can see it right here. You can see how low we are right here. I want you to watch my cursor right here, okay? You guys see this? You guys see my cursor right here? Right? You see where we are right here? I want you to see that right here, March 2020. I want you to go back into December of 2018, which is right here. Watch my cursor right down here, right? So I want you to see this as a market bottom. I want you to also see this as a market bottom. Okay, so placing this expiration in historical context is our delta tilt indicator, which measures put delta, call delta. You can see that we are at the March of 2020 and December of 18 levels as a result of these large puts. Expiration will force this metric higher. Okay, so we're probably at a localized bottom. You could have a bear out there telling you, yeah, we're going to burn it down to 350. I would say that in our normal trading range right now, like 360 to 410, it's probable that we'll trade outside of that range at some point in the next couple weeks, right? But do I think that that's the end of the world and we're burning this market down? Fuck no. It means that we're probably at a bottom right now. So take this into consideration as we trade forward. Take into consideration that we have jump risk. That's jump risk is when we have a market meltdown. What do we need to happen for a market meltdown? Take into consideration that we probably have a cessation of hostilities coming up in Ukraine. It's been going on for many months now. I want you to absorb all of this, right? So you're looking at some kind of support in the market. Technically, not I think we're doing this. Technically, right? Historically, we're at some kind of a general bottom in the market here. Okay, so take note of this morning. This has been associated with rallies in the past, and we still anticipate an OPEX rally today into Tuesday afternoon. Take note of this, okay, right here. Monday's a holiday, right? Juneteenth. There is one critical difference here, and that is the Fed. And this is the problem. This is where the danger is, because we haven't announced QE. We have no Fed coming out to save the market. This is where your jump risk comes in. We still anticipate an OPEX rally on Tuesday afternoon, Monday. There is one critical difference here, and that is the Fed. In March of 20 and December of 18, officials were rolling out the QE support carpet, whereas currently they seem to be doing the exact opposite. Another key point here is seem to be doing the exact opposite. That's key. I want you to take note of that because I believe that they do like to break things, but if you go back in history, like the 90s, the 70s, fucking 2020, as soon as they break something, they revert. So if we get a break here, if we get that jump risk, that's what some bears are relying upon. We're going to get that rip down or that sell the market down to 320. The next month they'll pull back the QE QT and the cessation of QE. That is all bizarre to me. Because if you're a bear, then you're telling me that we're going right back into inflation again, right? Not inflation, excuse me, and easing again. If you're a bear out there, you're contradicting yourself. You're saying that we're going to get a market crash and doom everything. But in reality, if we get down to 320 right now, like today, this week, they're going to fucking institute QE again. You know that, right? So we're going to get a ripped all-time highs again. So I don't understand the logic here from a bear. Anyways, now they seem to be doing the exact opposite. Am I a participant, or do I believe in this personally? I don't really care. I've got putback spreads on, so I don't care. If we go there, all my shit's gonna be fine. I'm not gonna be a fucking poor guy with a can on the corner. Putback spreads pay for themselves, sometimes even showing a little bit of profit. And if we have an outside of the money market event, they print good, and I can pull the fucking other side of that trade off. So it's bizarre. Just listen to a bear on that. To this point, note how that delta tilt reading above has failed to normalize at any point this year. March 22, we had very large put positions and equal to or greater than 10%, or equal to or less than a 10% market rally. But that faded quickly. This failure to launch suggests that call buyers have remained absent and traders are maintaining large put protection. I agree with that any rally will fail. Any rally will be subdued. Unless you get the Fed speaker coming out and say everything is fine, I think I agree with that statement, 100%. We quite frankly don't see a reason for this dynamic to change, which means we may be given tradable rallies here, but they are simply short covering and subject to reversals, much like we've seen all year. Their point is this: if you're a bull, you can. This is probably a place that you can buy a dip. If you're a bear, this is probably a place that you want to be ready to reposition yourself for the next leg down. That doesn't mean you come in today and buy fucking 360 puts at 360. If you're a bear, it means that you're waiting. You're going to say, okay, I might get some put spreads at 370. I'm going to get some 3-month or 4-month puts at 380, 390. And then I'm going to get fucking weeklies and 0 dates at 400, 410. That's what they're saying here. Okay. Lastly, we wanted to mention skew here, which is a bit odd. Our risk reversal metric registered at negative 0.04 yesterday, which is most often associated with new all-time highs. The fact that this is happening with fresh lows is curious and suggests a flattening of skew. This suggests that despite the recent macro developments, there isn't a serious new grab for put protection. This is key as well. Now, we have seen put protection come on into the market and some hedging come out of the market, but we haven't seen nasty new hedging. And that's what I want to talk to you about, which I talked about earlier. And that is that if we get this negative Q2, which it looks like, right, we're not gonna go up to 43.50. That means we're gonna put 2 negative quarters together. Typically, in Q3 we'll get a bounce. Q4 and beyond is going to be hell. So the thought process here would be, yeah, we'll hedge left tail risk, right? We'll hedge in case we get a market break and the whole market's red bars to hell. But for major market hedges, we're going to probably look for either putting more time on them, i.e. a October expiry, or we're going to wait to put major hedges on into, let's say, like I'm talking billions and billions, more than likely not until late July, mid-August, somewhere in there. Okay. Corroborating this is the skew index, which can be fraught with some calculation anomalies, but it signals a similar sentiment. This suggests that IV will remain contained as it has been for most of the year. An example being that VIX not making new highs, but we will want to see OPEX clear. That's the VIX is going to 100 crowd, right? But we will want to see OPEX clear before reading further into this. So we have to wait on this point. For today, it does seem to back our OPEX rally sentiment. I think that's all I've got. I don't know if there's anything more in this. I don't think there was much more in this today. You can always pause this video, come back and pause the important parts of this video. So this kind of backs up that same theory that we've been talking about all morning. So that you can plan out. You guys are always looking for the crystal ball, right? Well, you have it. You know, the crystal ball is telling you we might be trading sideways and up into early July, maybe even into earnings season. We usually get some weakness at the end of earnings season. And that should line up to some extent. And let's say we get some good earnings out there, right? They come out here and they've said we've trimmed everybody down, we've put layoffs in, we've done all this shit. And they have a good earnings season and the market is up. And then we roll into the volatile season of the midterm elections. So that kind of gives you the thought process along the way. It gives you an established trading range. You have to have some kind of outlook on the future. Even if things go sideways, when you guys put an outlook on the stock market, it doesn't have to trade to where you think it's going. You have to have that baseline so that you know how to react to the market as it trades into the future. So you're like, hey, if I think we're going to crash down to 320 this week, we're going to break the market.
Q1 GDP for Russia was up 3.5% year over year, in line with consensus estimates.
I think Jem was talking about that this morning. Jem Carson, I think, was talking about that on Twitter this morning. We have left tail risk events. How do you deal with that? But on the other side, the right tail is probable. I think that's what he was saying this morning on Twitter. I didn't read it quick. I quickly read it, but I figured that those guys were on the same notion. Would be you have left tail risk right now, but we're more than likely going to trade to the right side, right? So how do you invest and trade in that? My favorite's putback spreads. An unknown risk to the market, unknown headline news, but more than likely we're going to trade this market sideways and up into the next couple months. So for me, I would look for positioning this market into July and August long with some tail risk hedging. And then I would be looking to get aggressive for the next major leg down to position in those months, sometime in July and August, to be like, hey, I'm going to fucking load the fucking boat on some major puts down to the depths of hell. Does that make sense? A little weakness down here to 363. So 363 is right here. So we'll just extend this down here. Right about there. Yeah, it's all. It sucks about. What sucks about OPEX days, quad witching days like this, is you're just waiting for the next batch of put hedges to come on. You're waiting for the next batch of puts to be closed, and what you'll do is you'll end up getting these rips, and then slow trade down, and then rips, and then slow trade down as they buy puts. Sell puts, buy puts, take longs. There's usually a slow trading day. And then what we'll do usually is, as the day wears on, after the 1 o'clock hour, you'll start to see theta kick in on puts, and the dealers will begin to de-risk those puts that they have in the market, and you'll start to see an acceleration ramp higher. Just be patient this afternoon as we head into the later times of the day. And calls into Monday or Tuesday, calls into a day, calls into Tuesday, calls into Wednesday, should print quite well. And if you're in spreads at any point here, you'll have no worries. You just kind of sit back and fuck off until we get into Tuesday and Wednesday. You got Dan Breslin over here. I'm not reading comments. I'm going back to comments. Dan Breslin, we're fucked. So I'm looking at your comments right now. What's going on, Brad? How you doing? Yeah, I think we're waiting for, the Bears are waiting for market doom today. Bears are waiting for market doom. They're waiting for the break in the stock market today. They're not getting it. Yeah, so I was looking at, so John's bringing up 363 is basically a trend line going back. I was looking at that last night as well, John. I was looking at that last night as well. Oh, you know what? Hold on. Let me see. I'll do it somewhere else. Hold on a second here. I was looking at that too. We'll take a look at that too because last night I was like, did we recover? And we did. It was kind of funny to watch. Because you got people out there that sell subscriptions, so they don't care if the market actually dumps. They only care that they're able to sell doom. I know what they're doing. I think we all know what they're doing, right? These are the guys, they sell like premium subscriptions. They sell all this fucking doom. They don't tell you anything other than what their macro view is. I'm not talking about like Macro 42 or any of these other big real true macro guys. I'm talking about for the retards out there. So if you're going right back here, you see this one touch below, right? You see this other touch below. This is the S&P 500, the ES Mini, and you can see we recovered this. And we'll go back. We'll go on a smaller time frame here. And this is where the rage comes in. This is where the pure rage comes in. Whoop, let me see. So the incessant rage comes in right here. So you have this big move down, right, with the break of this market here. This is a failure of the market. This is very bad. I want, or not this. Let me get the whole move in. So this whole move right here is very, very bad. The stock market is broken. We already know that, right? We're bearish here. We know we're bearish. We know our overall view is bearishness. But the real rage, this is where the bear rage is. I'm going to show you guys where it is right here. Okay, this one, boom. Get this next one, boom. And what a bear really wants here is they want that break. They're looking for that break. Now, are we going to get that break is the question, right? But the reality is this really isn't the break. What the bear is really looking for was this. You want to see a severe break down here. This, right? And then that move lower. So even in a larger time frame, you're looking for a clean break here of this trend line that's been on since September that John Alexander was bringing up. You wanted a clean break here, and then you wanted some clean rejection to take this next leg lower. So let's say you are a bear. Let's say you're like uber ultra. Let's say you're like the biggest bear, the biggest bear. Let's say I think there's a couple of them out there that don't actually trade. Let's say you're that guy. Even if you're going to tell everybody that's happening, that we're the stock market, we have a stock market crash. You don't actually want to take that trade until there's a clean break of this trend line and at least one rejection, minimum. I don't want to hear anything about like, well, you don't get that clean break. We just send it to depths of hell. It doesn't happen. You usually get that one real break, rejection, at least one, if not two. This grinds up people in here, and then you take that next leg lower. So when a bear is seeing something like this right now, they're pissed off, right? They're hoping, they're saying, fuck you, Cap. We need this break here. And you got me telling them, eat a bag of dicks. We ain't doing that today. You got me telling them no. They want me to spread doom. I'm not doing it. It's not appropriate yet to do it. It's not the right time to be doing it. If you're going to spread doom here, that's when you get a real break, a couple rejections, and then we start heading down. This is where the doom comes in right here. Right there that I'm pointing to. The rejection, start heading down. This is where the doom comes in. And it's weird, too, because some of these we got other bears out there saying, well, I only want it to 3,500, and then we get that huge move up. I can live with that. That's still not bearish, though. This is bullish. If I see anything like that, if I see anything where we tap 3,500 and head higher, and if we get to 3,500, I'm going to expect not a move to 37 or 38 or 4. I'm going to expect a big push up here. So you've got all kinds of different bears talking, all kinds of different bulls here. Some bulls are just greedy, like me. I'm a greedy bull. I want to buy 3,500. I want to buy 3,200. But I'm not seeing that for myself right now. What I see right now is that we've tagged a double bottom. We've double bottomed here so far, and this is not the place to be taking a short trade until we get a breach, a real breach. I want to see a breach to take a real short trade where we are currently at this moment. I want to see like rolling waterfall hedges coming in right now. I want to see waterfall puts coming in right now. I need some facts. I need some fucking facts saying we're selling this market right now. I want some market mechanics. I want Gem. I want who was the other one? Peripheral. I want the real smart guys out there to say, yeah, the market's going to crash today. And I'm not going to listen to some dude out there drawing a goofy fucking chart saying it's going to crash tomorrow with like a big fucking. I'm not going to listen to some. Well, I mean, I'll listen to him as a humor. Like, you guys will see me. I'll post things like, I'll post bear porn. I'll tag it bear porn. That's all it is. It's like, hey, look, it's going to crash. Like, I can do some goofy chart like this for you all day long, and just be like, depths of hell. That's fine. I laugh at that shit and giggle at it. But behind the scenes, I need more proof than you drawing a downward fucking arrow for me to go full port puts right here. This is how you lose all your money. It's how you lose all your money. It's how you blow your fucking account up. Now, if you told me to go full port puts, here I've agreed with you. Here I've agreed with you. Here I've agreed with you. Even here, agreed with you. Ask accounts blown up. I love taking puts up there. And if we can get back up there, even if it's a failure up here, if we can get back up here, I'd take some more puts. We get up here, close that gap, take some more puts. I'm all over that. If we trade sideways in here and higher, and let's say we're in the middle of July or middle of August, and we've only gotten to here, let's say. So we've closed out the quarter red in July. We closed July and August up, right, heading into Q3. And you want me to buy some fucking heavy puts? I'll do that with you. I'll take this down to 3,200 with you. I have no problem writing that down. But right now, I need an event. I need something. Because the last two times that happens, what happened, right? I'll show you what happened the last two times we were down here. Bears got their asses blasted. Matter of fact, we'll call it 4 times. Danger if you're a bear. Danger if you're a bear. Now, can it happen? Sure. Is there a likelihood of this trend line breaking at some point? Sure. How do you account for this? Ratio spreads. Easy. Done. Solved. Easy. Wipe my hands of it. Where is the likely trade here? Up. That's where it is. The likely trade here is up. The likely trade here has been up 5 times, right? 4 times. I'll take those odds any day of the week. Any day of the week, I'll take those odds. Unless, of course, we have a market-altering event, right? If you came out tomorrow and said, oh, yeah, fucking, I don't know, Russia attacked NATO, I would say, yeah, fuck it, we're doomed. If you came out today and said, oh, yeah, Walmart declared bankruptcy, I'd say, oh, shit. Someone came out earlier this week and said, Redfin laid off employees. I'm like, that's not good enough. I think you should be short the real estate market right now. It's coming early on that. But that's not good enough for us to sell the fucking market to the depths of hell. I need to see, like, Fannie Mae get fucked up or Toll Brothers go bankrupt or, something like that, that headline news. Same thing with Tesla the other day. They were like, Kenneth Jones filed a lawsuit and it made like Bloomberg. I'm like, that's not cutting the fucking mustard. That's for some hedge fund out there trying to squeeze the last bit of gains out of their shorts on Tesla. That doesn't fucking fly for me. Or there was an open letter by some concerned employees at SpaceX. I'm like, were they software people? Because they don't matter. Were they human resources people? Because they don't fucking matter. And who was actually behind that open letter? Was it a political leaning in the background? Was it something that was pumped? has a political leaning to key players within that company, it would be easy for me. You know, some fucked up shit that happens out there is, if you're savvy enough, if I'm savvy enough, right, and I have access to, let's say I have access to some LexisNexis stuff, I can find out who some key figures in SpaceX is. I can then find out what social media those people are on, identify them, and then I can pump them full of information that's negative, right, towards SpaceX or Elon, and start to craft an opinion for them to then, and then we even talk to them in an email and say, you should get an open letter going on Signal or whatever it is, right? And before you know it, you've got someone working for you, and then boom, I find that those transcripts, I post them, and I've got a short on Tesla, and now I'm not just printing the original short, but I'm maxing it out. People pay for this shit to go on all the time. Do you notice that you don't see those things being released at highs, right? They're not releasing those letters, and they're not releasing some rando court case at the highs on Tesla. They only do it at the bottoms because they gotta print. They have to have buyers for those shorts. They have to have buyers for those puts. So I always get a giggle out of that. That's not really real. It's probably an entity in the background that has a financial vested interest in printing their large puts that they need somebody else to buy. They need somebody else to believe that narrative that we're going to sell the market. Even right now, I'm telling you right now, I'm going to tell you something. I'm going to tell you something very important. Okay, very important. There are banks, and there are hedge funds, and there are large players that come on social media like Twitter, and they poison you as a retail investor and say, the market's going to crash on June 17th, and it's going to crash on June 30th. So we need you to buy our hedging. And believe it or not, you're like, there's no way that's true. And believe it or not, that seeps into retail traders. So retail traders will be out there, and they'll listen to it and read it, and they'll trust these people because they've been right. And then these people get fed something wrong. And when they get fed something wrong, right, that's really the key point, right, is when they get fed something wrong. So I'm using you as a retail trader to sell the market. You're helping me to sell the market. And then when I need to get out of my position, I'm going to feed you bad information so that you end up eating those bags. Does that make sense? This is where you lose. This is where we have to be able to transition from bull to bear to bull, and decipher what's actually taking place. You're trying to tell me that they're telling you when it's going to crash? They're telling you it's today? I think you're fucking smoking crack. If you think it's happening today. I'm not seeing anything. I'm watching the flow all morning long. You guys know when that flow comes out, when we're getting hammered by it. And at this moment, we haven't seen it. If we see it later today, I'll change my opinion. But as of this moment, and this time, 12:18 in the afternoon, I haven't seen it. Haven't seen it come out. Nothing saying that it's coming out at this point. So it's 12:18. I'm going to take a quick break, right? I'm going to leave the stream up for you. I've got Trade the News on for you so you can listen to Trade the News. Please like and subscribe to these videos. Oh, wait a minute here. Looks like they had Trade the News off here for a minute. Let's see if we can put it back on again.
You're listening to Trade the News.
Somehow Trade the News turned off, so I'll leave it on here. So I'm going to take a quick break here. It's 12:18 in the afternoon. We'll be back by 1 p.m. I'll leave Trade the News on for you. I'll leave the Bookmap on for you. And if you guys want, I can put the, you know what I can try to put up? Let me see if I can get some options flow rolling for you, too, in the background. I'll put this on the bottom for you. And we'll see if so you guys can actually, in real time, watch this stuff. If you're a new follower, new listener, new watcher, anything like that, what you can do is, if you're lagging in time, you can speed up this video, go down to your player. There'll be a cog in the bottom right-hand side. You speed up, I'll sound like a weirdo. I'll already sound like a weirdo. But you'll be able to speed up the broadcast so it's real time, so you can have actionable stuff to look at. Let me see here if I can get this. Let me see here just a second. Close that up. Hang tight here. There we go. Hang tight for just a second here. All right. So while I'm gone on break here, you'll be able to see the flow as it comes in. This is the SPY, of course, and you can see that we're being led down to 363 right now currently. You can watch the flow as it comes in.
4 hours a day.
Sweet. So we've got some, we've got Trade the News on. We've got some, this is flow up above here. I've got your traditional candlestick chart here. I'm going to slide this over. See where our price target is above. Leave that one there. Let me go back and put this back up again. All right, so we're good to go. So when you hear that little boo-doo-doo-doo, that means new options flows come in. This is not raw flow. This is options flow that has to meet certain requirements. Buy above the ask. It has to match up to dark pool. Has to be. There's a bunch of different things that I can't recall off the top of my head. I always forget them, and then I come back and have to relearn them again. So you guys can watch this for the next half an hour or so. I'm just going to quick break. Please like and subscribe to these videos. Please consider supporting the channel. There's a donate button down in the description of this video. These are all my channel. Everything I put out is free. It relies totally upon the support of other traders out there. The information that I give you guys costs a lot of money. Time that I put into this costs a lot of money. And yeah, and I appreciate you guys showing up day in, day out. If you're a poor trader, poor investor, if you lost your shirt, you don't have to do shit. Just like and subscribe is plenty for me. There's nothing behind a paywall here. You can Google search my name, CaptainJimJames, for Twitter. I've got a private handle that's free to get into. You just put a follow request in. That's at CaptainJalAlpha. We have a Discord that's free to get into. Nothing that we do here costs $1. Not a penny, not anything. I want to say that I'm appreciative to anybody out there that does financially donate and support this channel. Due to you folks out there, this channel lives on. The social media presence lives on. I appreciate that support. It means the world to me. So I'll be back here at 1 o'clock this afternoon. I'll leave the stream up for you, and I will be right back. I haven't looked at PayPal in a couple of weeks, Steven. Let me take a look right now. Matter of fact, I'll put a Discord link up on at Captain's Alpha right now. So right now I'll post an invite to Discord on at Captain's Alpha, and I will check to see who's tipped. I haven't looked, to be honest with you, so I'll take a look and see who's tipped so I can give some. Today's fucking Friday, right? Yeah, we're coming into Juneteenth long weekend, dude. We're gonna do like so at some point today, I'm going to do a shout-out to people that have supported the channel. I'll grab a whiskey, too. So let's get into the end of the day. Let's have a whiskey. We haven't had a drink on this channel in weeks, right? Probably a month and a half or so. So I'll post a link to Discord, and I'm going to post a link to Discord, and I will come back with a whiskey at 1 o'clock, and we'll do some drunk trading today. We'll piss off the bears even more. Not the hey, by the way, if you're a bear out there and you're listening to this broadcast, I fucking love bears. I just don't like these motherfuckers out there that are doomers. I don't like fucking top collars either. I don't like bulls that are out there that tell. I have bulls that come into my fucking. I've got evidence Hold on, come back on.
Airline Trade Group sending a letter to the FAA saying that FAA is being reckless in its new
Hold on.
5G compromise with the wireless
done yet.
companies.
I want to be clear here. Crystal fucking clear. Over the years, okay, I get DMs from people. No, I get good ones, but I get DMs from people, like straight up DMs. I get comments from people.
Airlines for America saying FAA is requiring new equipment too quickly.
When Tesla was at a top, Tesla was at like 1250 or something. I had people sending me, screaming at me, fuck you, I hate you, Cap, eat a bag of dicks. Tesla's going to 3,000 this week, something crazy like that. It was like 12, we were at like 12 something, 1250. And to boot, they would send me screenshots like, I spent $300,000 on calls today. And sure than shit, Tesla rolled over. And they fucking burned it to the ground. Dude, that shit hurts me deeply. Like, it hurts my fucking soul. And the same thing is right now, and we're down here right now. There is risk we're going lower. There is risk that Tesla could go to 3,000 up there. But that loudest screamer, right? That loudest bull, you know what happened? They bought the fucking top and they're scared. And that loudest screamer at the bottom, generally speaking, didn't fucking buy a put until today or yesterday, and they need them to print. So just be aware of that. When you're hearing people out there in social media and they're talking about this shit, right? They're usually on the wrong side of the trade. So my only point here is, if you're a bear, I don't hate bears. I fuck with bears. I'm a bull. But I fuck with bulls too. Like, I go after bulls all the time. You guys have known me any of you that know me for years, like 2020s, 2019, 18, whatever. There's a few of you out there. I'll fuck with bulls and I'll fuck with bears all day long. I trade both sides of this. But I'm telling you what, it makes me enrage when I hear that screaming, that drum on both sides, and that pisses them off. They're gonna yell about me on social media. They're gonna hate me. They're gonna scream in chat boxes. They're gonna scream on Twitter. I don't care what they fucking do. They can eat a bag of dicks as far as I'm concerned. At the end of the day, all this has to do with is your investments, your money, and where we're headed, or where we think we're headed. And if you're right half the fucking time, you're beating most of those people. Most of them. Most of those people you're beating, generally speaking. Does that mean you can't have a bad trade in there? Sure you can. But if you're following your trading rules that you have set out there, and you're taking into account and consideration where we actually are in the market, you have to trade to those rules. I got to be honest with you. I mean, you go back and you look at that chart on ES, right? Like what, 5 times now? This has been a bottom. So if you had full ported puts or shorts, you'd been fucked at that time. You've been fucked. So I just don't want to hear it out there. I really don't. Like, this isn't that channel. This channel is the likelihood of what's going to happen. Do I take trades that are against the likelihood of what's going to happen? Yes. Do I take contrarian trades? Yes. But do I full port that shit? Fuck no. Never. And you shouldn't either, especially where we are. Do you full port calls on when it was at 1240 or whatever? No, you can leave some on if you want. But don't go on social media and be like, yeah, I just fucking full ported calls at 3,000 when we're at a fucking Tesla top. Don't do that shit on SPY either. Don't go on fucking social media, be out there fucking telling everybody that they suck and that they fucking blow or your mother this or whatever. That's why I get pissy. Because the reality is we're probably at a bottom. At least for a minute we are. I don't care if it trades 350. It's still a bottom. 350, 360, 370. That's fucking hand grenades where we are right now. Okay? But for an actual market crash, easy. Ratio spreads, putback spreads. When I go on break right now, if you don't know what those are, just Google search that shit. It takes 5 minutes to learn that trade. It's simple. And then you can just shut up anybody out there that's screaming. Same thing with Tesla. When you're at the top on Tesla, that's just a ticker I'm using. It doesn't matter what the ticker is. Let's say you get up there and you're like, I want to buy some outside the money calls, Cap, because I do think it's going to 2,000 today. Sure, do that. but preface it with a little asterisk down below that, hey, also, Cap, I bought some put spreads for like a month out to protect that trade, right? At least say that. But this whole, like, we're going to the moon and we're going to the fucking depths of hell, when the reality is, we're probably, like today, we're probably going to trade up from here. Generally speaking, we're up. We're going up. So I don't like when they're out there on social media telling you guys that all that fucking doom nonsense. You know, eat a bag of dicks. What's up, one day at a time? Good to see you, brother. Hope everybody's doing well out there. Yeah, I think I pissed some people off this morning. We're down to like 198 viewers right now. I think we had like 400 or 500 at one point, and then I fucking went off on a fucking tangent. I went sideways. I'll be back. I'm going to take a break. Let me take a break. It's 12:30. I'll be back at 1 p.m. If you're just joining us right now, we've got, while I'm gone on break right now, we've got a traditional candlestick chart up. You see where your vol trigger is. You see we're trying to reclaim 370 above. You can see some resistance above here at 371. Above here, you'll see the flow as it comes out. You're looking for, in this flow specifically to today, what you're looking for is hedging coming in on right and left tail risk. So you're going to be looking for major calls coming in with big money. That should lift the market up as the today moves forward. You're going to be looking for moments in the market where they're buying large hedges and how those will be impacted in the market because we are on an OPEX day. And then in the background over here, I also have Trade the News running. So if there's any nasty news that comes out, that we'll get it before Walter Bloomberg posts it on Twitter. So I'll be right back. Give me a half an hour, and I'll check back in with you guys. We're going to be having a whiskey later in the day today. We haven't done that in a month and a half or so. And we're going to talk about anybody that's helped financially support the channel. Thank those people. And hopefully, as the day starts to wear on, we're going to get a kick from dealers as theta burn kicks in on the 30% of all puts in the market expiring today. We're more than likely going to get a kick from dealers. So even if we don't have market participants coming in, even if we don't have retail buying the dip, even if we don't have banks buying the dip, we know somebody that has to buy the dip today, and that is the dealers. They have to buy the dip. Well, figuratively, they have to buy the dip into the close today and into Tuesday. One more note, I want to give a shout out to my attorney. He is listening in today. I love his ass. So we're gonna give a shout out to my attorney. If any of you guys, maybe he'll pop up in the chat. If you live in Michigan, the state of Michigan, and need one of the best attorneys in the entire state for your real estate, family law needs, if you want the best divorce attorney in the state of Michigan, this is your guy. If anyone's in Michigan and wants a kick-ass attorney, he's the best attorney in the state of Michigan. Real estate law, he does real estate law for me, family law, anything like that. He's a badass attorney, and he's got a stable of criminal attorneys, and he's also in his office. He's got a real, shouldn't say anything, but if you guys want to know who he is, maybe he'll pop up in the stream, or you could just DM me on Twitter or something. I'll get you his contact info. He's badass. We're likely going to just want to step in here for a minute. We're likely going to have a squeeze coming up here. We've got VIX at a support level. If VIX breaks, we should get a nice fat squeeze higher here, folks.